Good morning, everyone, and welcome to the Vetiva breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. On today's rundown, consumer goods analyst Chima Okadike will be giving us a review of international breweries and Nigerian breweries 9 months results. Following that, we'll get a recap of the equities and fixed income market from our traders, and then conclude with headlines from across Africa brought to us by our media partners at Frontier Africa Reports. As usual, we'd like to remind everyone that this meeting is being recorded and the audio file may be shared with third parties. We're also streaming live on our Vetiva Online Facebook page if you'd prefer to view or join from that platform. The session is set to last for 30 minutes inclusive of Q&A. And if along the course of the meeting you have any questions for our speakers, you can send them in using the chat function available on Zoom. If you're joining us from Facebook, you can utilize the comment section. However, if you'd prefer to speak, you can use the raise hand function and you'll be given an opportunity to speak. We'll now start off with Chima, and she'll be reviewing international breweries and Nigerian breweries 9 months results. Good morning, Chima.
Good morning, everyone. Thank you, Victoria. So like Victoria said, I will be going over the performances of Nigerian breweries and international breweries, two of the brewery stocks under our coverage, and I'll be going over their 9 months 21 performances. So starting with Nigerian breweries and looking at their Q3 performance, we saw revenue grow 2% year on year to 100 billion. This was driven by a mix of volume and price increases in the period. So in terms of volume, we know that last year their volume suffered significantly because consumers were unable to access on-trade sales points, and that sort of acted as a low base for growth in this current period. Apart from that, the company has introduced a number of strategies or a number of new products into the market. So one of which is Desperados, which already exists in its international markets, but is a new product in Nigeria. Apart from that, it also introduced new variants of its pre-existing SKUs, new flavored variants of its pre-existing SKUs in Nigeria. So those prop volumes up for the quarter. In terms of pricing, we saw that the company increased prices in Q2 this year. So we know that since the introduction of excise duties in 2017, pricing has been a very sensitive spot for brewers in general. We remember how when Nigerian breweries increased prices in response to the excise duty increments, international breweries refrained and they had to lose a lot of market share. However, this year they were able to successfully increase prices with the agreements or with the following of other brewers. So they were able to increase prices and still maintain their volume market. 21 period grew to 309 billion naira, which is a 32% year-on-year increase and a 2% outperformance of our 303 billion naira estimate. However, we also saw growth in cost of sales, which sort of dampened the company's growth in revenue. So cost of sales grew 39% to 67 billion for the quarter, and 31% to 199 to 200 billion for the 9-month period. So in line with increased volumes, the company also had to increase production volumes. Apart from that, the company has embarked on a repackaging strategy where they have rebranded most of their SKUs and are now using cans to package their products. So based on that, we are seeing the FX impact of that strategy on their cost of sales. Also affecting cost of sales is general inflation that we've seen so far this year. So the growth in cost of sales has impacted margins, and we saw that margins declined from 37% in Q3 20 to 33% in Q3 21. However, for the 9-month period, gross margins have come to 35% from 38% in the previous year. Another pressure point for Nigerian breweries is its operating expenses. So in line with its increased offerings in the market, it has had to pursue an aggressive marketing stance. So we've seen that for the... Hi, Victoria, can you still hear me?
Yes, Chima, we can hear you.
Okay, so we've seen that for the 9-month period, cost of marketing expenses, have increased 30% year on year to 67 billion. And with an additional increase in admin expenses, we saw that OPEX rose 26% year on year to 85 billion naira. With this, we've seen the company's operating margin decline just 1% from 9% to 8% for the Q3 period, and managed to stay flat for the 9-month period. Accounting for largely stable finance costs, we saw that the company's PAT came in at 8.2 billion naira due to the underperformance in Q3 from increased OPEX. However, this is an 18% increase from the 6.9 billion that was recorded in 2020, although it underperformed our expectation of 13.2 billion naira. For the next quarter and to close the year, we expect volumes to remain strong, given the current strategies that they've implemented, as well as the demand boost we normally see in the Q4 period. We expect full year volumes for the company to grow to 421 billion naira, which is a 25% year-on-year increase. We have also revised our OPEX projections in line with current trend, and we expect this to come in at 116 billion naira, which is 30% year-on-year higher. This brings our PAT expectation to 9.1 billion naira, which is a 22% increase from the previous year. So moving on to international breweries, much like Nigerian breweries, international breweries saw a mix of volume and price increases as well in this quarter, which helped revenue grow 30% year-on-year to 46 billion naira and brought 9 months 21 revenue to 128 billion naira. The increase in pricing, like we saw for NB, and the company's extensive capacity, which it has increased so far in the year, we believe has been responsible for the increase in turnover so far. However, lower than Nigerian breweries margins, international breweries gross margin has increased from 16% in 9 months 20 to 22% in 9 months 21. And we believe that the company's increased pricing has been very significant to this. So recall how international breweries refrain from increasing prices so as to gain market share. So whilst this has affected their revenue significantly, it has also impacted their gross margin negatively. However, this comes as a positive development, and we expect to see that affect them positively going forward into the next quarter. Despite the increase in gross margin, we saw a 24% year increase in admin expenses and an 11.1 billion other expense charge from FX losses, which left its operating loss at 15.8 billion. That's flat, no change year on year. So because despite the increase in gross margins, we saw that operating loss still remained at about 15.8 billion due to a 11.1 billion FX charge in the year. So this negated the impact of lower finance costs and still left the company's bottom line at a loss after tax of 13.1 billion, which is about 3 billion higher than the 10 billion it reported in 9 months 20. Into the new quarter, that's Q4, we still expect the same factors driving NB's growth to drive international breweries' growth. We expect resurging volumes as well as increased pricing and the demand boost we see in Q4 to affect volumes and revenue significantly. However, given the already negative impact that the company's OPEX and FX losses have had on their results so far, we expect to see this impact into the coming year. And with that, we expect their loss after tax to increase to about 16 billion for the full year. That's it for international breweries and Nigerian breweries.
Thank you very much, Uma, for the review. Next up is Simbiat, and she'll be giving us a recap of the Nigerian equities and West African capital markets. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. So like she mentioned, I'll be doing a recap of yesterday's market activities across West Africa. And starting in Brvm, after weeks of positive activity, the market was dominated by sellers as the composite index lost 14 basis points. Losses were recorded across board. In consumer goods, we had Solibra and Nestle Cote d'Ivoire, Vivo Energy in oil and gas, and Crown Cement in the industrial sector. While market activity traded mixed with significant decline in total volume traded. Year-to-date return for that market stands at 33.91%. Going into today, we expect to see similar trading pattern, given the recent gains recorded in that market as sell-offs is likely to persist. Moving to Ghana, we saw the markets closing flat in yesterday's session as the composite index remained unchanged. In total, we saw only 11 stocks trade with the session ending with just one gainer, which was a 4.17% gain recorded in New Gold ETF. However, we did see a significant improvement in market activity due to increased demand in GCB Bank on the back of its impressive Q3 results, followed by ETI, Cowbank, and MTN Ghana. Going into today, we still expect similar names like GCB, Cowbank, and MTN to dominate activity charts while market tries to recover from the flat close. And like we've always mentioned, for any of our listeners looking at exposure at these markets, they can reach out to us via email at dealing@vetiva.com or to our sales team at sales@vetiva.com, and we'll get back to them. Finally, in Lagos, Nigeria, we saw yesterday's session largely dominated by the sellers. So a total of 31 stocks declined in comparison with just 10 that gained. However, the index was able to close positive by 9 basis points on the back of the gain recorded in Boa Cement. And of course, this was possible due to the large market capitalization of the industrial goods company. The other two sectors that also closed positive were consumer goods and oil and gas. So for consumer goods, we had International Breweries and Champion Breweries, and also Dank Sugar gain points, while Oando lifted the oil and gas sector. Speaking to activity level, this traded mixed with volume declining by 15%, while turnover saw an uptick of 1%. So generally, we saw profit-taking activities persist in yesterday's session with stronger sell-side pressure seen specifically in the banking space. So going into today, we foresee activity level trade mixed as investors begin to take advantage of lower entry points. Thank you.
Thank you very much, Cynthia. Next up is Sheikh, and he'll be reviewing the BRVM. Good morning, Sheikh.
Hello, good morning. In terms of the BRVM over the last week, it was a very impressive week for the regional stock exchange, with the first semester publication gradually giving way to the third quarter publication, which were even more interesting. The BRVM composite displayed a jump of 2.63%, reaching way above that 180 bar that was passed a few weeks ago, and to reach today 194.93 points. And the volume of transaction has increased by more than 1 billion CFA. So multiple publications have occurred this week, with 27 in total, including 22 with positive results. It should be noted that 19 of them relate to the third quarter, including 16 beneficiaries, and 8 others to the first quarter, 6 beneficiaries. Large capitalization are not to be outdone in this lot. So we can cite the case of Sonatel, which stock price increased by plus 0.75%, which achieved an historical result, a profit up by 35% in the third quarter of 2021. In the same dynamic, 28 stock recorded a positive weekly performance and contributed to the market surge. Investors responded to this dynamic of the financial market by bringing the volume of transaction to around 2.4 billion CFA, a margin of growth of nearly 50% compared to the previous week. In terms of individual performer, Solibra Ivory Coast recorded a gain of 33.54%, which gives the security one of the best performing stock of the week. The company owes success to its good results. The company announced its half-year results that is both profitable and resounding, i.e. double its achievement at the end of June 2020. A perfect series of 4 sessions followed by a jump by 0.75%. For Bank of Africa Mali, far behind Solibra with a performance of only 12.19%, the title have got back on track, making us forget the haircut that investors had inflicted on its poor results at the end of June 2021. It's the technical indicators have stagnated since last week in its oversold zone, hence the decline of sellers giving way to a wave of buyers and consequently to an upward recovery of the security. For the lower performance, SODC recorded a decline of 7.22%, like similarly to its latest publication. The 14% drop in its profit announced in the third quarter earned it the sanction of investors. It is important to note that the title struggled to pass the resistance of 4,500 CFA. The combination of these two factors have been detrimental to a possible progression of the security. It is then followed by Bolloré Ivory Coast, with a drop of the stock price by 5.35%. The symbolic bar of 2,400 CFA again slowed down the evolution of the title. In terms of publications, SOGB issued its third quarter 2021 numbers, showing net profits growing by 132%. This good performance is explained mainly by the evolution of palm oil and the palm oil and rubber linked to the world trend. Also, other publication of the first semester was Sitab and Total Ivory Coast. Server Abidjan and Sodesi also issued their first quarter to 2021. Sorry. In terms of the fixed income market, the market showed a jump of 0.01%, reaching 7.1 trillion. The positive jump was mainly due to the Treasury Public Ivory Coast bond. The weekly value stood at 5.17 billion CFA. In terms of the money market, the state of Ivory Coast and Mali issued a request in the market totaling 70 billion CFA. 70 billion CFA, and the investor proposed an amount, came back with a response of 167 billion, i.e. a recovery rate of 239%. However, only 74 billion was absorbed in the market. And we are expecting in the coming week treasury bills from the state of Burkina Faso and Senegal, totaling 132 billion CFA. Sorry, it's 80 billion CFA expected for this week, for this week. That's it for the update for the BRVM. Thank you.
Thank you very much, Sheikh. Next up is Omorige, and he'll be taking us through Hi, Omorige. Can you hear?
Good morning, Victoria. Good morning, everybody. I can hear you now. Okay, on the back of the FAC allocation that came into the system yesterday, system liquidity improved significantly to open at 190 billion positive from the 26 billion negative that was recorded on Monday. As a result of the significant improvement in system liquidity, interbank rate declined by an average of 775 basis points, as OBB and overnight rate closed at 12.5% and 13% respectively. For today, we expect interbank rate to trade at similar levels in the absence of any major shock to system liquidity. The parallel market traded at 517 naira to $1 yesterday, while the earning window opened at 414.26 naira to $1. The highest trade that was recorded yesterday was 444 naira to $1, while the closing rate was 415.07 naira to $1. Brent and WTI lost 1.2% and 1.6% to open today at 83.74 and $82.59 per barrel respectively, as industry data showed a big build in US crude oil inventory. The TB's market traded on a relatively quiet note yesterday, with bearish bias seen on the long-dated maturities. Activities we are seeing on the 25th August 2022, 29th September 2022, and the 27th October 2022 maturities, while trades were majorly executed on the 25th August 2022, 27th October 2022, and the CBN Special NTB, that is the 29th November 2021 maturity. Overall, average benchmark rate rose by about 2 basis points to close yesterday at 5.19%. The OMO market, the OMO market also traded on a muted note yesterday, with weak interest in the secondary market. We witnessed few interest on the 4th October 2022 maturity, while average benchmark rate remained unchanged at 5.97%. The bonds market continued to trade on a muted note yesterday, with mild bearish bias. We witnessed interest majorly along the mid to long end of the benchmark curve, especially on the 2036, 2037, and the 2045 maturities, while trades were majorly consummated on the mid-dated maturities, particularly on the 2034 and the 2037 maturities. Overall, average benchmark rate rose marginally by about 1 basis point to close at 11.99%. The Eurobond market traded on a relatively quiet note yesterday ahead of the Fed rate decision today. We witnessed CSI pressure on the sovereigns, especially on the Nigeria 2025, 2027, 2038, 2049, and the 2051, while the most actively traded corporate were the EcoBank 2026, EcoBank 2031, and the UBA 2022 Eurobond. For today, we expect the current weak sentiment in the bonds market to persist as investors continue to select attractive offers across the benchmark curve, while we expect the T-bills market to trade in line with the level of system liquidity. That will be all for fixed income. Thank you.
Thank you very much, Omorige. We'll now conclude with Justina from Frontier Africa Reports, and she'll be giving us some headlines from across Africa. Good morning, Justina.
Good morning. Good morning, everyone. We start from the West African region, where FMDQ is set to launch its first financial market infrastructure group in Africa. It's called the Green Exchange. It's for green and sustainable securities. President Muhammadu Buhari says Nigeria is committed to reaching net zero emissions by 2060. Meanwhile, Kenya's President Uhuru Kenyatta says the country plans to maintain low carbon trajectory by 2030. Uganda's inflation fell 1.9% in October from 2.2% in September, while South Africa's October PMI fell 53.6 points from a revised 54.7 points in September. Also, fuel prices in South Africa is set to surge today, as this would add to inflationary pressures. Zimbabwe's Mining Corporation is planning to set up a fund for small-scale chrome miners. In Egypt, the country is planning to raise private sector contributions to economic activity to 50% within 3 years, while Morocco's manufacturing PPI climbs 2% in September. Meanwhile, Tunisia's money market average rate dropped slightly to 6.24% in October from 6.25% in September. That's according to the Central Bank of Tunisia. That's some of the headline stories we have from Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina. We have now come to the Q&A segment. If you have any questions for our speakers, you can send them in using the chat function available on Zoom. If you're joining us from Facebook, you can utilize the comment section. And if you'd prefer to speak, you can use the raise hand function and you'll be given an opportunity to speak. While we wait for questions, a quick announcement. Our economist, Ibukun Omoyeni, will be speaking to us on X-raying the e-Naira on Friday, the 5th of November. We hope to see you in that session, as it will be an enlightening one. We have one question, the Q&A box, and it reads, good morning. From your presentation, it looks like the brewery sector is still largely challenged. However, Guinness seems to be an outlier looking at their recently released results. Firstly, what factor is driving Guinness that MB isn't able to also leverage? Secondly, international breweries has been a loss-making business for a couple of years now. Are they ever going to turn to profit? I'll direct this question to our consumer goods analyst, Chima, the take. Over to you, Chima.
Thank you, Victoria. So for the first question, the difference between Nigerian Breweries and Guinness is that Guinness has a total beverage portfolio, so it offers spirits and in addition to malt and lager, although it is trying to defocus from its lager business to its spirits business, which offers higher margins. So in the last period, Guinness had increased prices across its spirits segments, that is international premium spirits and its mainstream spirits, which already offer higher margins. So the margin growth we saw significant margin growth to about 32% from 23% in the previous year. That's mainly what has helped Guinness to achieve a very significant growth in its bottom line that Nigerian Breweries doesn't have. However, is currently suffering not because of volumes, but because they have to, or they have adopted an aggressive marketing stance, which has affected their OPEX significantly. We expect this OPEX to win in the coming periods as the new products that they're trying to push catch on, and they don't have to spend so much on marketing. For international breweries, we know that they had to increase capacity in 2018/2019, where they spent about $250 million on a new plant, which has also been which has also increased their OPEX in terms of depreciation and whatnot. However, for international breweries, like we mentioned, they have a lot of capacity at the moment, and they are the market leaders in the Southeast and the Western regions, which are the major consumption points for alcohol in Nigeria. So with that in mind and the expected capacity utilization expansion for the company, we expect them to turn a profit soon. I hope that answers your question.
Thank you very much, Chima. We have now come to the end of today's session. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we thank you for joining us today, and we hope to see you in the next session. Thank you and good morning.